You know what's wrong with most volume profiles? They give you bars or histograms and leave you guessing what part of that volume really matters. So you end up reacting late, chasing moves, or holding trades that don't have conviction behind them. And that's exactly why this indicator is worth knowing about. This tool doesn't just show you where volume happened, it shows you where clusters of volume formed around price levels, revealing the areas where buyers and sellers are most committed. And once you see how these clusters align with price action, trading becomes a lot less random. In this video, I'm going to show you this powerful indicator, explain exactly what you see on the chart, and show you clear long and short setups you can use in any market. To add this indicator to your chart, open TradingView and pull up any chart you want. I'm using the 30-minute time frame here, but this works on any time frame and any market. Click Indicators and search for Volume Cluster Profile VCP, and make sure you select the one by Zierman. Once it's loaded, you'll see something new on your price chart, a series of clusters and gradient bars that wrap around price levels. These clusters aren't random bars. They represent actual groups of volume where the market spent time agreeing or disagreeing on price. Now let's talk about what you're seeing. Right on your chart, you'll see vertical regions where the volume cluster shading is heavier, and regions where it's lighter. The thicker, darker areas are where the market traded a lot of volume. These are the prices where buyers and sellers agreed, that's why price spends more time there. The thinner, lighter areas are where volume is less intense. That usually means price passed through quickly. The market didn't want to stick around there. This gives you a visual map of the real battlegrounds, not just random bars. However, just trading signals like this is a recipe for disaster. You need tools that do more, like setting optimized trade targets, identifying volume, and filtering out bad signals, so you only catch the most explosive moves whilst avoiding sideways range. That's exactly what my tool does. And the best part, it's 100% free at the moment. So click the first link in the description and get free access while you still can. Now look at how these volume clusters interact with price. When price approaches a strong cluster from below, it often slows down or pulls back, because that cluster represents a balance point where traders previously fought for position. When price approaches a strong cluster from above, that cluster often becomes support again, because the market already agreed to trade heavily there. Watch how price behaves when it gets near these clusters. You can see price hesitate, reverse, stall, or accelerate. And all of that happens without you guessing. Everything you need to know is visible. Before we talk strategies, let's make sure your settings are right. Double-click the indicator to open the settings panel. You'll see options like Look Back and Cluster Resolution. Look Back controls how many bars back the indicator looks to build the profile. For intraday trading, something like 100 to 200 bars works well. For swing trading, use a larger number like 300 to 500. You'll see the clusters redraw as you change this, so adjust to where the chart feels clean and meaningful. Cluster resolution controls how detailed the volume clusters should be. Higher resolution gives you more precise levels but can look busy, while lower resolution smooths the clusters out and highlights the strongest zones. Once you're happy, click OK. Now let's get into how to trade this. Long setup. First, look for price to be above a strong volume cluster. You'll see these as a dense area on your chart. They look like thick bands around price levels. When price is above a strong cluster, that cluster can act as support. Wait for price to retrace down toward that cluster. If price pulls back into the cluster and then forms a bullish candle that closes above the cluster level, that's your cue. This tells you volume at that level is holding, and buyers are stepping back in. Place your stop loss just below the bottom of that cluster, because if price gets under it, that cluster has failed as support. Your take profit is at the next strong cluster above, or at the next structural high you can see on the chart. Short setup. Shorts are the mirror. Look for price to be below a strong cluster, one that looks thick and meaningful on the chart. Price should retrace up into that cluster. Now watch how price behaves as it gets there. If you see a bearish candle that closes below the cluster, that tells you the cluster is acting as resistance, and sellers are defending that area. Once that candle closes below the cluster, take your short entry. Place your stop loss just above the top of that cluster, because if price gets above it, the cluster has failed as resistance. Your take profit is the next strong cluster below, or the next structural low you see. Just before we get into the best settings, don't forget to claim 100% free access to our AI indicators that catch the best moves across every market and time frame. Get instant access using the link in the description below before it's too late. Now let's tune this for different markets. Forex. Use a moderate look back of around 150 to 250 bars. Forex moves cleanly between levels, so clusters become reliable support/resistance. Crypto. Price can move fast. Use a tighter look back of 100 to 150 bars so recent clusters show up more clearly. Also, watch how bullish/bearish volume pressure shifts crypto spikes fast. Stocks. Use a larger look back around 300 bars bars to capture both intraday and swing clusters. Stocks can respect cluster levels for longer moves, so be patient on entries. Gold. Price respects volume structure strongly. Use a high resolution to see tight clusters, and keep stops just outside those clusters, because gold tends to reject them sharply. If you want to understand where the market truly traded, not just where price moved, this is what you should be using. Thanks for watching. I'll see you in the next one.